Good morning. Good morning. Thank you. Good morning, everyone. My name is Peter Duga. I'm with CAPCO. I'm a managing principal. Also run CAPCO Center of Regulatory Intelligence. I'll be the moderator for our panel this morning. So we'll be here to talk about new market and regulatory developments. One of the things we kind of wanted to set the baseline before we introduce our fellow panelists is talk about a little bit about why we're here today. When we talk about new markets and regulatory developments, one of the things that we've identified is the theory of deregulation. So while the Trump administration came to office, what we really saw was a slowdown in regulation for almost all industry sectors. But since then, what we've seen is really the states start to step in. Everything from new laws, new regulations, for everything from cybersecurity, privacy, almost every one of the sectors were affected by the states and their aggressive actions towards industries where they thought the Trump administration wasn't going to take control, apply appropriate pressures to industries where they thought there was particular concerns. In addition to that, what we've also seen is the emergence of new technology. So you think about artificial intelligence, machine learning, a lot of areas where there's not a lot of clarity in laws and regulations that govern those activities. What we've started to see is, again, states, federal government, international bodies all step in to say, we need to take control of this situation. We need to identify where there's gaps, where there's issues, and then start to identify what needs to be controlled for. And I think that's kind of a good leeway for where we are today. But in addition to that, especially in the US, what we're also seeing is now political pressure. So now we have the 2020 elections. We are also going to have elections for the US Senate in 2020. So there's going to be a lot of change that we anticipate. I think almost what we really would do is work backwards. When you see the Trump administration and potentially whether he is or is not elected, you start working backwards from there. You start to identify what the regulatory landscape will look over the next few years. And so there's a lot of change. That's the one thing that is consistent is change in our industry. And I thought this is a great opportunity for us to really start to talk to experts who are in our fields, who can provide us some insight and the best practices around the areas that we need to address. So with that, what I'd like to do is introduce each panelist, and we'll start the conversation. Sylvie?
So good morning. Working?
Is it working in the back? Can you hear?
Do you hear me? Yes? Okay. No? I see some no at the end, so... Okay, I try, and otherwise we change the mic. So my name is Sylvie Focquet, and I'm a bit special here in this room because I'm on the dark side. So I'm on the side of the regulatory forces. I'm working for the European Union. I'm working for the Single Resolution Board. This is an agency from the European Union. The mission of this agency was established after the crisis in 2008 to see how we could save banks from crisis, or if we should save banks from crisis. So when there is a crisis, it's my role, it's to see what we should do with the bank and take control of the bank.
Hi, I'm Denyette DePierro. I am Vice President and Regulatory Counsel for Cybersecurity at the American Bankers Association. And I did a lot of resolution work during the crisis, and then I thought I needed something slower, so I got into cybersecurity technology and fintech, which didn't work out so well. But no, part of my day job is basically looking at that intersection between privacy, technology, fintech, cybersecurity, the bank use of tech, and then what are the regulators saying about it? Where do we think they're going to go? And there's so much obviously going on right now around cybersecurity, and even the international forces that kind of, everyone always says to me, especially the mid-size and regional banks, that what happens internationally doesn't matter. After the Basel Capital, those rules came down from Basel. Everything that's local is global, and everything that's global is local. So I spent a lot of my time, especially in cybersecurity, looking at what is happening internationally, how does that impact how the US regulators will be looking at it, and how will that actually show up eventually as regulation that you then actually have, sitting on your desk in hard copy.
Hello, Thomas Scheppat from Salesforce, and I'm the Senior Director for Policy and Governance, and we're building out an enterprise-wide governance, risk, and compliance organization. I focus mostly on the process and the tools side, supported by three of my colleagues. colleagues here. And we spend a lot of our time trying to figure out of all the regulations and certification bodies out there as we purchase new companies or acquire companies or partner with new companies and move our products and services into new markets. How do we keep up with all the regulatory changes, new markets, new things that we purchase, and make sure that all of that ties through to our certifications and into our compliance programs?
Thanks, Thomas. So the first question I have for the panelists is, organizations are struggling to keep up with the pace of regulatory changes. What are some of the best practices to stay ahead of the regulatory change curve? Sylvie, start with you.
So before starting, I forgot to say that I should have a disclaimer. So everything I say here is my opinion only. It's short. So you spoke about the pace. Just a fact I learned is that for a global bank today, they have a new regulation coming in on average every 7 minutes. So just to give you an idea. And how to deal with that, I think there are three parts on which a company can act. First, the scope of the risk. Second, the relationship with the regulation. And third, the relationship with the operation, the business. So the scope of the risk, there are two kinds of risk. There are the risk that we know and the risk that we don't know. If we know the risk, there are the risks that are regulated and there are the risks that are not regulated. If they are regulated, normally we should have a compliance program already in place. If they are not regulated, there is a key question to be asked is that risk really harmful? And for who is that risk harmful? Is it for the company or is it for other stakeholders? And should we do something about it? And what I would like to just to underline is that the purpose of regulation is to address those risks that are harmful. And so if they are not regulated today, you can expect that one day they will be. So one way to stay ahead of the regulatory changes is already to recognize, that there are those risks that have been not addressed or not enforced today, and to try to do something about it. Very interestingly, there is the example of Facebook, and there was Mark Zuckerberg who said, please regulate me, and I don't think that he really likes to be regulated, but he did recognize that, in fact, there were risks that were such that it would expose its company, Facebook, to a reputational risk that is so big that, in fact, if there is no regulation, then he has nobody to blame except himself. And so that's really something that a company should keep in mind also, because sometimes people will say, there is no law, so why should I do something? But in fact, keep in mind also those other risks that could come and the long-term effect of that. For the risk that you don't know, there is a sentence I really like from Warren Buffett that says, we never know who is swimming naked until the tide goes out. And so, yeah, that's really, what you should try to do is to try to imagine all those scenarios where there could be some changes, and what should you do then? Then you spoke already about the politics, so the link with the regulatory is very important to follow the politics, to understand the regulation. There are already the RegTech, so all those tools that allows you to digest this amount of change very quickly. And also you should expect some contagion from existing regulation like the GDPR that we see now in California, in Canada. So this is an example of international contagion of regulation. Finally, I said you need also to take care of your relationship with your operation, because if the changes are going quickly, it means that you should be able also to implement those changes quickly. And so that's why the link between the risk that you want to address and your operation should be very clear, and you should already have this interconnection in place so that you can act directly when something happens.
Before we jump into that real quick, you mentioned the interconnectedness between Europe, GDPR, and the U.S. operations within either U.S. operating facilities or interconnected. So how do you coordinate those with international bodies and domestic bodies within the U.S., or do you? Or is it more, do you think it's left up to the industry or the business to identify how to approach both entities, meaning either the EU, the ECB, for example, or for global regulated bodies?
I think it's both the industry and also as a regulator, we also have a responsibility to share those regulations. And so we have some forum like the G7. We have also association of regulators where we do share also those regulations and we exchange that. But of course, the industry also has its role to play.
So Denyette, cybersecurity,
which
information
part?
technology, privacy, kind of cover it all. So how do you keep up with all that change?
Yeah, I would add two things. One is if you're waiting until the risk shows up in a regulation, you're waiting too long. And I would say that, and I don't freak out if you're compliance people. Like, I have enough to do. What I'm asking for you is just be curious and start educating yourself. What's in the headlines? What's happening internationally? What are those key phrases? So because you will see it eventually. It might be a year or two out. But at least you won't be surprised by it. You'll kind of understand the history around it. So the first, if you're looking at long-term impacts, watch what's happening in those international bodies. You can actually get on the email distribution list for the Financial Stability Board, for BIS, the Bank of International Settlements, the Basel Committee. They put out white papers constantly, and those are usually going to be starting to tell you. And that's where the influence, the persuasion is coming down from those international bodies and hitting the FDIC, the OCC, the Fed, the SEC, oftentimes. Even something like the Conference of State Bank Supervisors, it kind of trickles down into those state licensees as well. So just watch, see what's happening. You'll start seeing these shifts and trends. And what we were seeing a couple years ago around cybersecurity and even information security, risk management, was very focused on cyber and very specific risks. What has happened is the conversation has shifted, and it's really shifted to that international level because they're not just talking about cyber anymore. They're really talking about business continuity and operational continuity, operational resilience, because ultimately, especially if you're in tech long enough, you will get breached. The acceptance now, there's not much I can do. I can build it high as well as I can. Ultimately, every company, financial institution will be breached in some way. So what the bigger question is if you accept a breach, the second phase is what does operations look like? What does continuity like? Can I keep the payment system going? Can my customers still pay their mortgage, even though my entire ATM system is down? So it's questions like that we've really shifted to. And you would see that shift in conversation if you're watching and just looking at those kind of international white papers coming out of those particular bodies. The second thing I would say is when it comes to especially IT, in your examinations, those compliance exams, watch the headlines. The agencies are incredibly reactive to current breaches, especially because it may be exposing either new vulnerabilities or kind of just somewhere in there's a gap in our policies procedures. Something like Equifax. Soon as Equifax happened, the first question banks are being asked in exams is tell me about your patching policies. And that was kind of a new, so again, watch your headlines. That's a very easy way to assume, like when social media started, everyone started getting involved in social media, the first question an examiner would ask when they'd walk into an institution, especially if they were active on Facebook, which was show me your policy. Because what they want to see is, are you stepping out into new areas that you haven't really thought about and you have no governing policy? So when those new things happen, those new fads and trends, new breaches, new headlines, do a little, again, be a little curious what actually happened. Even something like Bangladesh. We're getting a lot of questions now coming up in IT exams. Tell me about your router. If you have a $12 router at a financial institution, you might want to swap it out. And again, what are your, and how do you build in those policies, and what are your internal messaging and permissions? How do you regulate that? Who has access? A lot of focus right now on on-prem security. So once the data is actually moved to the cloud or to your core processor, it's probably fairly safe. But the real question is who has access to your Wi-Fi and your on-prem networks? Are you actually, when people retire or they leave your company, how are you actually safeguarding their access or those passwords and kind of shuffling those people off your network? far too many people have been retired for a long time and can still access their work email, and that's one of those concerns. So it's those kind of things that we're really seeing is when it comes to risk, what's happening internationally, that's your long-term, again, just be curious. I'm not saying to change your policy and procedures immediately, but you might want to look at it. And then secondarily, what's going on in the headlines, because that's going to tell you what your next IT exam is going to look like.
So once you've identified a potential impact, I guess from an association standpoint, because you talk to a lot of different people in an organization, how do you say, okay, once an identification of a regulation, change in a law, that's been identified, then how do you have people from a best practice standpoint talk to each other within an organization? I think that's what we've seen a lot of times. CISO's not talking to CTO, the COO's not talking to Chief Financial Officer. How do you encourage that interaction so they can come together for a common understanding of the impact?
I would say a part of that is, there's a huge piece of that is culture, which is, if you're not having those kind of collaborative relationships, part of it's just the relationships. Like, what is the ability at your institution to have those conversations with your CISO? We have also found that there's a personality of those individuals that work in tech and banks that they seem to always be a bit separated. I'm not sure if that's self-imposed or institution-imposed, but part of that is breaking down those walls. There really seems to be a focus now in banks that if you're a CISO that doesn't have the ability to explain what's happening in tech and risk in a clear way, or you are unable to accept the feedback from your risk and legal and compliance counsel because you seem to think that you know best about your networks. We have boards now that are more willing to actively challenge those people coming in and saying that they're tech experts than we necessarily had. I think there was a level of intimidation around cyber and risk. So those walls are starting to break down. And part of it is just enforcing those conversations and having at a very early point where we're constantly telling individuals, it's very easy to kind of silo up and say we have this new process and I'm only going to talk to our compliance staff. And once compliance staff is comfortable, then we'll bring in risk and then we bring in legal, and some far later point they might bring in IT. You have to have those conversations very early and bring all of those groups in. So you're looking at these almost multidisciplinary approaches to your policies and procedures and activities, and then kind of training everybody. There isn't necessarily a single compliance officer. We have a lot of institutions now that everybody's a risk officer. Everyone's has their piece of compliance they have to keep an eye on. And it's not just siloed out the way it used to be. But those conversations have to happen early and often.
Yeah. Just to add to that, I think that's where governance and integrated risk management plays a huge role, in that you get the right people in the room to make those types of decisions, and you're connecting from the business all the way back into operations. So those conversations are going on, and as a company, you are making risk-based decisions that, yes, we are going to buy this company and take on these additional risks or these additional certifications or regulations, et cetera. And you have a venue to make those decisions, whether that be like a certification board that meets and discusses whether or not we want to take that certification on, and which includes the risks and the costs and the people and the operations to continue to maintain that. But that's what we found really useful on that side of it.
Yeah, following up to that, Thomas, one of the things you had mentioned a minute ago was merger and acquisitions. So I'm sure many of you, as you buy new companies, start to think about acquisitions. How does Salesforce, when you're starting to buy a company, start to identify the issuing authorities, the regulatory bodies that you have to monitor for, and then identify, and then from a surveillance perspective, capture that information to understand what your compliance obligations are?
Yeah, that's a huge challenge. To that first question, how do we stay ahead of the regulatory changes? We try to look at things a step prior to that and say, how do we ensure that we're maintaining our customers' trust in a way that they know that they're covered, they know that we've got them covered, and that's not by waiting for regulations to come out, and it's not by looking at what each of the requirements are in those regulations, because everybody has that same information. It's by looking forward and saying, what is it that we see in the future? Where do we think we need to go? And what should our requirements be? Or what should our internal bar be that meets all the rest of these other bars? And some of them are quite low, like PCI. I think that's a very low bar. And some of them are quite high, like FISMA, FedRAMP, and others. But still, it's getting ahead of that and not being in control of it and not being the person who's being impacted by it, right? You're not waiting, you're not watching. You're you're actually out in front of it, like you were mentioning before.
I would actually add to that.
Please do.
I would actually, it's interesting because when it comes to M&A, one of the, talking about shifting trends, it used to be, especially in banking, if I'm looking at M&A and I'm looking at a target, I'm just looking at franchise value. And now, and at the end of the transaction, you might be like, oh, we should probably look in their compliance program, and do they have a $12 router? I don't know, you know. And then you find all these, boxes in a back room somewhere you have to sift through and try to figure out, who is this entity culturally? What is their risk and compliance culture? Has now become one of the first questions that is being asked in M&A. What does their cybersecurity look like? What are we about to buy? Do they have a $12 router? Has it already been breached? Because, especially post-crisis, and now looking at, the new vulnerabilities and targets coming around cyber, those become the first questions and actually can significantly impact the franchise value. So the deposits you may have on hand almost become, I want to say they're less relevant. That's always going to be very relevant, but there's a very close eye being given to those targets that might have better compliance or better cyber. Because going to the long term, and what risks am I actually buying? Those are one of those things that is hard to undo if you actually have bought an institution that's had some not great practices.
In those risks that you are buying, also think about how, this new product could be misused, what could be the consequences that are not intentional. Think also who will win from this new product. Is it appropriate to use this new technology for that? So all those questions are also reflecting your values. And sometimes it's difficult because the values that you can have inside your company or with the regulation, it enters in conflict with another value. And I will give an example. You have the case of GDPR, and at the same time you have the blockchain technology. And in fact, GDPR, the right to be forgotten, delete. Blockchain is immutable, so it's keep. And so how do you reconcile those two values together so that you continue to have something that makes sense for you? And finally, something also that we hear a lot is that sometimes it's so difficult to see clearly, the impact of a new product. That's why there are now some what we call regulatory sandbox. So we have that in the UK, for example. And I believe that this is something that should be expanded in order to allow innovation still with the new technology.
From an M&A perspective, one of the approaches you can take is if you have your internal bar, your set of information security standards and controls and activities, et cetera, that meet all of the regulations that your company currently has to meet. You take some subset of that as a playbook into the M&As that you're looking at, and you get a good sense of the maturity of where you're at there. You at least have a better understanding of what sort of risks you're looking at, what things you're going to be bringing in. But even that won't protect you completely. After having been with Cargill and with Microsoft and with Nordstrom, I can tell you some horror stories about things that we purchased that we missed something. There was a risk out there, and it was significant. But at least if you tie together your M&A teams with what is it we're going to hold those businesses accountable to when they're fully matured and fully on board, you can catch that stuff up front versus doing your due diligence and ignoring your security requirements and then bringing them on board and find out that they can't comply with any of it if it's a huge issue.
So I think the next iteration from that would be, as we talk about new product, new service, new business line, or new market, so new regulation. So once you've identified new law or regulation has changed, impact analysis is the next logical step. So my next question is, how are you assessing the impact of regulatory market changes on policies, risk controls, procedures, and processes that need to be potentially revised in the context of that change?
Yeah, I would say the new profession that's arrived in the last 18 months, this idea of the change risk manager. We're seeing more and more institutions are actually having a dedicated person on staff whose primary job is to see what's changing, how they're going to implement it, updating policies and procedures, getting training, education. So that is one way. Obviously, there's a role for software. I think as this has become much more complex, the ability to actually rely on that's just the reality of it, which is never makes, especially in financial services, we're probably the most risk adverse sector, appropriately so. But it's really difficult to say, like, we don't necessarily have our arms around everything that's happening. But it oftentimes is true. You're not alone if you feel that way. You're overwhelmed and exhausted. It's kind of where we are.
Yeah, change management in this space is key because the relationships that you build out between, from an integrated risk management perspective of your businesses, the products that you're serving, to those regulations is huge. And if you have policies like information security policies and privacy policies that are then supported by a set of standards, which are then supported by a common control framework, which is then supported by control activities, one small change anywhere in that in that process or in that chain of events there, I mean that could be a huge deal. And it could be a 1 week or it could be a year-long effort to get that change to take place. But understanding those relationships and having good change control is key.
So what about if an impact analysis is missed? Meaning you've misidentified a regulation, a law, or a change that's going to impact your business, your operations, your processes, whatever the case may be. What have you done if you've identified it maybe at a later stage, or it's just been a complete miss and someone like an association stepped in to say, hey, this is what we expected from you, this is what the industry standards are? What steps do you typically take in order to address that?
Yeah, I can start with that one. Just speaking in general, on anything specific, I think resiliency is the key. So if you're referring to cybersecurity, you're all going to get breached. You're not going to get measured whether you're going to get breached or not. You're going to get measured on your ability to be resilient when that breach occurs and your ability to continue to do business. So with referring to having a auditor or an assessor come in and say, hey, you missed something, you're not going to get measured based on the miss. You're going to get measured based on your ability to get mitigating controls in place, to show that you've been thinking about that, that you've got processes in place that normally would have caught that, and that you're able to start taking action immediately on that when identified.
Yeah, I would add to that. Number one, like, you will miss things. When you look at something like IT, I mean, the regulations that support LEBA is the 12 volumes and 1,000 pages of the IEC IT handbooks. I'm sure there's pieces of that that are not fully implemented at your institutions. So just kind of take a deep breath. It happens. Even something like the social media guides came out in 2013. Banks are amazed when I tell them that it states in the guidance, even if you're not active on social channels, you should be monitoring. They still expect a level of monitoring for your institution, what's being said about my institution, what are people saying about us from a reputation perspective on social channels, even if you have no social presence. Most banks are amazed when I tell them that. So you're missing things, you just are. The other piece of it, I say, when you discover something, part of it is cultural, so have some bit of elasticity when mistakes are made, because then people are going to be willing to actually admit to it. We missed something. Okay, what's next? Like, just move on. Second piece is, if it's going to take, if you have a long tail of implementation or change, and you go back and review all of your policies, have timelines. And again, when the examiners come in, it's not just we're working on this immediately, yes, but this is our timeline for implementation. These are some of our goals. This is what it looks like. This is the group we put together, our interdisciplinary, so we can move quickly on this. And it happens. It happens all the time. And rely on your trades if you have them.
I just would like to add also that, especially when you speak about new technology, what I see is that the regulation comes more and more, I would say, purpose-based instead of rules-based. And the big difference, of course, is that the burden for the implementation for the companies is more difficult, because sometimes they say, hey, tell me what you have in mind when you wrote this regulation. And then, of course, it depends case by case, company by company, and sometimes the regulator also does not know the answer directly when he writes the regulation. And the best example for that is the GDPR regulation, where you got a regulation with a purpose, this right for privacy, and at the same time, we knew that there were all those technologies, there was this complexity, and there was no clear, I would say, rule about how you should do that. You just have a rule about what would be the final result.
As a follow-up to that, though, so what happens, too, when there's not a lot of clarity? Kind of touched on AI, machine learning, all those areas. There's not a lot of clarity around what regulators expect, whether financial services, healthcare, or any other industry. So how do you approach an issue like that to identify, okay, we know this is an issue, we're going to operate with the technology that uses these type of, innovations, but there's not a lot of clarity there. So how do you approach it? Do you look at regulators' speech? Do you use congressional testimony? Do you look at enforcement actions? What type of content do you examine to help inform your approach to that particular, issue set?
First, I would say is talk to your examiner. Find out what they're being told. What is headquarters saying? Oftentimes you might hear, if there isn't a regulation yet, there's not much you can do. So from a pure, what are they hearing? Again, I would be thoughtful about what kind of feedback you hear, because they might be able to tell you a bit about rumor and gossip, but until they've actually had training and there's regulations in the book, I wouldn't make significant changes to what you're doing in-house, unless there's a piece of guidance. If there's some kind of issuance from the regulator saying we want you to pay attention to something. I would say the only weird thing, the FDIC relies a lot on, they have their monthly bulletins, a quarterly bulletin that comes out. They actually put a lot of information in there that's kind of, it will telegraph what they're thinking from a regulatory perspective, that if you are FDIC insured, pay some attention to that. It's also helpful to, the agencies tend to kind of marginally kind of work together, so it's kind of tell you what the thoughts are happening. But for the most part, I would again, be curious, see what's happening in the headlines, what's happening internationally. Something like GDPR, no offense to our European brethren, not great, not a fantastically well-written piece of statute. And I would even say the regulations we're seeing now that are coming out kind of explaining GDPR. If you gave a very straight read of GDPR 2 years ago when it was first issued, you could read GDPR in a very different way. But because of kind of the lack of, at this point, especially in the States, we haven't seen it domesticated against an institution that doesn't have European operations but may hold European data. It'd be very early, if you don't have European operations, to start implementing GDPR, because the U.S. courts haven't even said this applies to you yet.
Congress is a little behind on that one, but they'll get there eventually. How do you see compliance functions evolving in terms of collaboration with audit, IT, risk? I think what we've seen now, I think from an industry, is moving from build, maintain, to now compliance optimization, but also enterprise-wide. I think that's kind of a new concept for not a lot of institutions, is the enterprise-wide compliance and risk functions. So how have you seen that evolve?
I might be the oldest one here, so I have the longest opportunity to see it evolve. But it used to be the case where I was an audit director, an IT audit director, and it was a big secret, right, to keep all that information about those IT systems and applications and how they're secured away from the auditors until it's time to come and have an audit, and then you dig it up and then you find it, right? And now we're in the period of continuous monitoring or continuous compliance, where we're building systems and capabilities either in the cloud or in the code or in the tools that enable everybody to be auditing all the time, right? The people who are managing the systems, the auditors, the governance and compliance folks, we're able to all see that information on dashboards or through your Metro Stream M7 product. And there you go. Little plug for it. You know, and that I think is how you bring that stuff together today. And that takes the level of collaboration, the level of trust, and a control environment in your company that hopefully exists. Or you still will run into those traditional walls, traditional barriers that they'll be judging people who look at this. So let's all get together and continue to monitor this.
You think that's been forced, meaning has changes in laws and regulation forced that? Or just because of an industry, you're thinking it's more of a best practice now, it's an expectation?
I think it's more of an expectation from our customers. You know, for Salesforce, to be able to be transparent with our customers about our ability to comply and provide them environments that enable them to comply is huge. And that, you know, that's one big push for it. I think the other big push for it is that it's, you know, we're in really complex environments, and our environment is made more complex every year because we acquire, purchase, or partner with 5 to 10 to 15 or 20 different companies. And our ability to bring all of those different systems, technologies, applications together in a way that we can continually monitor it grabs us towards some sort of efficiency and optimization.
Yeah, from an association standpoint, you know, how have you encouraged that in our industry, financial services industry, to get together to come about with industry best practices that would set the standards and improve coordination enterprise-wide?
I would say part of it, going back to the evolution of it, I think part of it was just pure necessity, especially after crisis, post-Dodd-Frank. Your average bank was having to make a significant number of new hires. Average community bank, I think, average community bank, 200 million in size, 45 employees, was having to, on average, hire 5 new employees, not for business development, but purely for compliance. What we started to see was just because of the resource suck and the burden on that, was that I would get calls from people who were executive assistants who are being told now they own some piece of compliance. I mean, I think some part of it was just pure necessity. And the other piece of it was you can't have it started to become so complex. The demand so high, one person couldn't manage all of it. So you had to delegate some amount of compliance to every person who touched that document, everyone who touched that customer. So we started to get a more enterprise-wide approach to borrow them a couple of years, but the cut and paste was still to do, you can't do it anymore. So it really is about that in-house expertise.
So Sylvie, from a governmental perspective, is there anything that you all look to from organizational perspective when it comes to compliance and governance functions within an organization?
So the biggest question is always the independence of the compliance function. So because if there is a link between compliance and business, the incentive, to hide something that went wrong could be high, and so the ideal scenario is when the compliance directly reports to the board of directors. We spoke about the fact that the board was now more and more willing to challenge also the compliance functions and the results from compliance. And also being sure that you have these 3 lines of defense. So this means that the business should really also play an active role. And in fact, at the beginning, it can be a burden for them, but that's where also I believe that compliance should also create some added value also for the business. So especially now we are speaking about compliance links with data and technology, and all this ability to have an audit trail, to be able to drill the data, to be able to know exactly what's the root cause of a problem. This can also be used by the business for strategic purpose and other stuff. So there is this partnership between compliance and business that should be developed. And finally, we spoke also about delegation. And a very important thing to know is that when a company delegates, outsources a risk to another company, the final responsibility, the final accountability stays within the company. So there is also the need to be able to challenge this company that's giving you a service, because at the end, it is your responsibility, and it's also your customer that will see your delivery.
Yeah, we've increasingly been hearing about credible challenges, and that reminds me, if there's an issue, it's purposeful or not. So there's been several incidences of compliance officers and executives getting blamed and penalized for not fulfilling their duties. How should compliance and policy and governance functions transform to strike the right balance between business performance and compliance and risk management adherence?
You've been here longer than the rest of us.
Experience being on the planet, on the planet. Well, I think the key to that is having a very thorough and efficient risk assessment process, security risk assessment. I'm not talking about ERM. I think that has a key role too, but from a security perspective, that you have a very clear understanding of where your risks are at, and you have those discussions at a governance level, at the executive level, or what types of risks you're willing to accept and what you're not willing to accept, and what the decisions that you're making, versus things that you're not taking accountability for, that could end up, coming back to haunt you later because you're not looking at them. And then, of course, complying with the requirements exactly as stated in every single certification or every single regulation that might be out there. For us, it's 40 plus. That's not necessarily possible. What is possible is that you have a process in place, and that you have the governance in place, and the discussions happen, and the decisions get made, and people have accountability for making those decisions, and you can show that, demonstrate that to the assessors, so that they see that, yes, they have a well-thought-out process, they understand the risks, these are the decisions they've made, here's the control they put in place, here's why that control meets their objectives, and yes, this meets the principle of this particular regulation. If you don't have that, if you just throwing controls out there without having the processes in place, I think that's where you're running into trouble, because you're going to have inconsistencies, and you're going to have things that have not been thought about at all levels, and that's going to show when the assessors come in and start asking questions.
Yeah?
Yeah, I would add to that. A good compliance officer is hard to find, so if you have one, treat them well, and just give them some respect. It is an incredibly hard job to do well, especially if you have to be that person who walks into the boardroom and says, make sure they feel supported, make sure the education and training that's needed so they can point back to the book. Remember that thing we did that thing on, the training you did? You violated it. That makes it easier to have those conversations as opposed to having to kind of curb somebody's behavior afterwards. Culture is a big one. If the senior leadership and your board of directors are not kind of following the rules, it's hard to believe that anybody else is. And I would say too, from a pure examination perspective, something like, Rego is a pretty low-lying rule. It's been around for a long time. But a bank that doesn't have good Reg O policies and adherence is going to tell me a lot as an examiner about the strength of your compliance staff, the training that you have, the ability of the board and the senior leadership to be reined in when they're misbehaving. And that can touch on a lot of different subjects, not just bouncing checks. So I see that that you can't manage your Reg O well. You're unable to have those difficult conversations. The training's weak around something as easy as Reg O. And I got to really start questioning what else is happening in the institution. So I would say, there is a business reason why a good risk and compliance officer is incredibly important in making sure that audit and everything is all that's kind of tied together. But that is a central role, almost very personality driven in some ways. But again, not a good one. Treat them well. It's not an easy job.
Sylvie, what's your perspective?
Yeah, I would like to rebound on treating well. So, because the remuneration policy has been also a big question mark, and of course, for those functions, any, I would say, bonus that is proportional or that would lead that person to take risk and to not think compliance anymore could, of course, impact also the integrity of this compliance officer. So this is a very tricky question. Also, something else that I would like to add on what you said is that there is a trend that more and more after a crisis now, we are pursuing personally the officers in the bank or in the company. So people become really individually accountable, and we got the example 10 years ago after the crisis in the bank. There was the chairman of a bank that bankrupt who said, "Oh, I didn't know, I was not aware of those risks." This is not something that would work today. This is now, you are expected to have a process in place, you are expected to control those risks and to be aware of them. So if your compliance officer is telling you something, please listen to him. And then the second part I would like to underline is about the business case for compliance. Because what I observe in many companies is that compliance is seen as just a cost, and that the view of the management is to do the minimum so that I would say the regulator does not say anything about it. While in fact the business case of compliance, there's someone who said just looking at the cost does not tell you anything. You should also look at benefits, and the cost you should also have in mind. It's not only the fine that you would have from a regulator. It can be also all the litigation that you would get from customers or other parties, and also it's your reputation. We spoke about the fact that companies are more and more customer-oriented, and this can have a tremendous cost also for those companies. So when you put all that together and you look at the benefit also now, as I said before, from the fact that compliance becomes now intelligent compliance that can be used also for other purposes. When you put all that together, it changed the game and it changed the business case.
Thanks, Sylvie. Pretty sure what she said was compliance officers deserve a raise. So when you go back home, tell them the government said that you deserve a raise. Well, thank you all for your insights, Sylvie, Denyette, Thomas. Thank you so much. So if you wouldn't mind thanking the panel. Thank you very much.